Yo, 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 what up, Darth Dude? Just YouTube budget tunes, bro. Oh, it's not bad sound. Just doing a sound check. Oh, it's not bad sound. Just doing a sound check. So, what are we looking at for next week? Let's check it out. This was that awesome bottom we caught in the group. Beautiful move. Man, that was a beautiful move. Nailed this SR flip. Real nice. Doesn't get better than that. So now that we got this big green candle here, we can expect some price action like this for a bit. We got some compressed candles here. Normally after compressed candles, there likes to be a nice expansion. Now how far that expansion goes, you know, it's always to be determined. Beautiful thing about this was, I think this was a retracement. Yeah, golden pocket retracement. That was great. That was a great move. Golden pocket right at the SR flip. It doesn't get nicer than that. So let's see. Boop then scoop. Yeah. So now something like this. I like to put some lines on these buddy candles. We found our weekly bottom for a bit on both candles, and doesn't look like it was enough. So maybe we come back. Maybe we come back into here next week. Let's drop down to the daily. Tried to get up there, took out all the liquidity here. She just stuck in limbo. I wouldn't mind this price coming into this buddy candle here. Look at that. Look at that. Just flawless setup. If price comes down into here, we definitely want to start looking for the bottom. And just for contrast again, let's pull fibs. And look at that. This is beautiful. Golden pocket in the buddy candle. Now why is this a buddy candle? It's an order block. and it gets traded away from. Now, normally people are got their order block indicators and they're thinking, okay, this is a bearish order block and price is gonna go downwards. This is, yeah, over and over again. Yeah, baby. So the reason why people get wrecked using order blocks is because they don't understand that there's more than one type of order block. And once it gets traded away from, if you're taking out double bottoms and stuff, if the market maker looks like it's doing a stop hunt on people's positions, this is not a bearish order block anymore. It becomes a breaker block, and price snaps through them. When you see me in the group and you see me say calling out snappy green candles, this is what I'm looking for right here. This buddy candle is getting snapped through by price action. So I would like this one, this little inefficiency here, this buddy candle, I would like to see this traded into before going higher. Yeah, no kidding, eh? Just keep getting wrecked and wrecked. This guy on Twitter was trying to argue with me. It was so funny. He was like, we were like right here, and my bottom, yeah, they sure do. Was my bottom pattern was playing out, and Buddy said we were dumping to 8K, and I just laughed at him. I said, is your stop loss right here? Because that's going to be my targets. And yeah, he got stopped out, and we nailed this. This was a beautiful move right here. Check this out, Darth. And pull your fibs from low to high. Look at what happened today. Remember I said that weekly candle was going to make a big giant wick? That happened. It came down and dropped to the 786 retracement. Bang! No hesitation. Yeah. Swatino always says, pay yourself. It's true. So anybody here watching this in the future, if you wanted to screenshot that, or maybe just copy what I'm doing, I'm just drawing a line to this buddy candle right here, and this one here. I'm pulling fibs from the bodies to the bodies, and this zone, I don't want to see it traded back to. I would like to see this traded to. I would like to see this buddy candle take control once this area has been filled. This little efficiency. And if you don't know what that is, I don't know. Your post, I just brought your stop loss. Oh, hey, oh, you were there? Yeah, that dude, man, he was just like, he's like, institutions, they trade animals. They trade harmonics. I'm a professional harmonics trader, and then he just got spanked. Institutions are not trading animals. We snagged a 786 to the micro penny on QNT today. That is dope, dude. Like, that is really dope. It's amazing what happens when you start buying these retracements. Like, you're instantly in profits, and you're just sitting there wondering when to take them, you know? And it's funny because greed works in both ways. Like, they say don't be greedy in the markets, but like, at what point does greed stop being a thing? You're in these markets to be greedy. You want to pull money out. That's the whole idea, is taking money out. So a greedy person wouldn't be like, oh, I could make this much if price went up there. A greedy person would be taking partials. And that's good. Partials pay 100% of the time. So it's the greed thing is kind of like this double-edged sword. It's like, are you being greedy or are you being FOMO? I don't know. It's just weird. It's so awesome you come hang out, Darth. It's just like me and you on the live. We got a plane cruising by. Some tunes happening. Excuse me. And if anybody wants to say I'm crazy, let's just go back and do some price action back testing with the fibs. I seen somebody on ICT's Twitter just now saying fibs LOL. Just totally clueless, the poor guy. If you go to this low and anchor it to this high here, and you look at it like this was an SR flip, right? This SR flipped nicely. It was like, okay, we're going up now, and it dumps to the 618, and it doesn't even come to the 786, and it just rees. Looking for a bullish retracement zone makes sense here with that 28.4 buddy candle. Hell yeah. Yeah, absolutely. Price has already like done its job down here. It's already pissed everybody off with these double bottoms getting violated repeatedly, so I'm pretty sure it's like induced max pain, max fear into people from getting in. And now price is taking out liquidity up here from all the people who went short and don't pay themselves. So for sure. And look at this. Isn't this wild, hey? If you got in on this 618 retracement, look at this target, my 0.05 fib retracement, or fib extension. Got hit nicely. Like, that's a beautiful move right there. I was showing Buddy this today. If you drop into the 1 hour time frame, he was like, how do you know where to pull your fibs from if it's like this, and I guess 4 hour. If you pull your fibs from bottom to top on this one, the 618 was never taken before it went off. And what I'll do is I'll come into this little order blocky poo right here, because in the smaller time frames, this is a swing low. So I would just take it from these candles right here, that swing low right there in the 4 hour. I wouldn't go off this one. I would pull it from this one, and then it gets traded into. So play around with your fibs. I have an old chart right at the 618, 19, 20K all in here, and got made fun of in the group. Oh yeah, like when we were down here? Absolutely. Yeah, yeah. And this is funny, man. It's so funny because I had all sorts of stuff going on here. It was so funny. I had like this big bat drawn. I had this bat going on. I had his fibs pulled. I had a fib circle drawn. Oh man, it was getting wild. And yeah, this move upset me quite a lot actually, because I had a triangle position size in here from the 618 down to just above where I stop loss, and I did like to ladder in, so I'd be this my first one, my second one, my third one, and stop loss. This is how I would ladder into the position, and it didn't even come in from my other orders. It just took right off as soon as it touched the 618. It was gone. Yeah, I can show you. how to do the fib circles. So you take a box and you take it from the low low to the high high. And you got to be very precise with this. You got to make sure that you've got the highest candle. So if you look up here, it'll show you which candle's higher. So this high is 25,259.72. And this is 25,262.85. So this is your higher candle in this section of price action. And we'll go to the lowest, and we're using the wicks. And then you copy this and you go up here and you match these two corners as best as you can. And now you take your fib. So mind you, this price action doesn't exist when you're drawing the fibs, right? So at this point, you're right here. And now you take your fib from this corner. We'll turn the magnet off. Match that corner to this corner. And there's your fib circle. And that's how you place your fibs. Then you can delete your boxes. Excuse me. And then that center should be a target. Bang. Target acquired. Yeah, essentially, exactly. It, yeah. So when you're coming into the fib circle, you're snapping through these. You're snapping through these. And then when you start dropping out of the fib circle, you drop hard. And if you notice, this was a little, support and resistance flip here until the 618, and then it snaps through, and then it snaps through. And now, as you're falling out of the other side of the fib circle, it snaps through, and this does act as support for a minute, and then it snaps through, rides it up, and then it gives up the ghost, and it just keeps breaking through. Every time you cross a fib circle, leaving it, it snaps back down. So because we're bullish, we can do this again. Turn on the magnet. Match these corners. And turn the magnet off. Premium, baby. And there you have it. Look at that, eh? Just riding that circle nicely. I wonder if there's a way we could do this better. Maybe I'm thinking we can do this a little better here. That candle's a bit higher. And the reason why this works is because we're in a bull run. We've hit the bottom. Like we're at the beginning stages of a bull run. We've hit the bottom. And regardless of what anybody else says. That's the bottom. And if you're anticipating higher prices, of course this is going to work. Now, yeah, that's a little better. See how it's respected better? The lines are respected better, and then it snaps through and it's in there like swimwear. Snaps through and it's in there. And now we're snapping through this one. So short term, it looks like we're going to 39,000, 40K. 40K right in line with that wick to the left. Yeah, buddy. This one here. Would that lower high to the left be a buddy candle target? Lower high to the left. The lower high. Are you talking about any one of these here? 42K. This guy right here. I'm in a little bit of a delay, so yeah, and the one above. So what a buddy candle is the candle before. Yeah. So this guy right here. Um, when price starts trading away and changes direction, it becomes what is commonly what is known as an order block. So this buddy candle right here is the order block that's respected at first, and it does take out the highs. I was looking at that 42.5 wick. Yeah, you're talking about 42.5. Somewhere in here, right? This guy right here, it's gotta be. I'll just wait this time. This guy right here, yeah. Okay. Um, that's not a buddy candle. No, this is a liquidity area where price, where the people who shorted this bear flag, which was me. This was my first live trade ever, right here. I got in on the retest in the 4 hour time frame of the 200 SMA right here. I actually got in here, laddered in, and then it dumped, and that was my very first trade. And so the big hedge funds and the big money that shorted this, they don't trail their stop losses, so price action is coming up to get them. A buddy candle is just an order block, and an order block is a change in the state of delivery. It's not a block of orders, and there's different types of order blocks where it changes the state of delivery. So in a sense, yes, it's a type of buddy candle, but it's not the one that we're looking for that I play. You want to see price action trade away and then through it, and that buddy candle becomes the SR flip. So if we traded away from it like we did, and then if we traded through it, that buddy candle would become the catalyst for higher prices. And this would have sent us right to 100K probably if that's where we were going, but we were not going there. Excuse me. Yeah, so our current bullish targets, I rock the monthly for this. It's a lot more clear to see where we're going. So because we're in this big macro SR flip, I mean, look at that. Doesn't get any better than that. This is my 1 minute play, 5 minute, 1 hour, any time frame. Now we're in the monthly. We are hitting that to the tick. To the tick, bro. Um, the market induced all this greed. That greed was traded into, induced max fear. SR flipped on the institutional aspect of things. And now we're going for this double top. After we SR flip this inefficiency right here. Yeah, buddy. So all those guys that are still calling for 8K, like it makes me cringe. Absolute cringe material to see people regurgitate the narrative that comes from the people who want to get you wrecked. It's insane. Let's see, do we got anybody else on the live? Is it still just you and I? Still just you and I. Oh, my door slammed. Did it scare you? It scared my wife. The wind's blowing up here. Yeah, just me and you still, Darth. I'll probably just be doing these mediocre updates until, this takes off. A lot of people, the fact that Lifer got so many people on his live is really impressive. It's really impressive. Like he worked hard for that. And they're shitting themselves because they didn't get 16K. Yeah. And how long did they wait for that? All the perma bulls and or not bulls, sorry, all the perma bears. Let's say they were waiting for here. They waited a year just for price to reverse on them and never see their 8K, and they were so convicted on waiting for 18K that they didn't buy 16K, and they could have doubled up by now. We bought the bottom of Hex. Well, the bottom at the time. It's dumped since then because of the liquidity transfer. But yeah, I told my original crypto mentor he runs a hedge fund in CO. Uh, hmm. That's not Carolina. I'm not sure which state CO is. Um, that the bottom was in at 16K in January, and he said, "Be careful, LOL. Like, be careful, I might accidentally buy the bottom." The thing is the big money and the hedge funds are what the market maker's trading into. When they go and make these, when they set, oh, Colorado, nice. When the market makers set the everything into buy mode, they're trading into the hedge funds liquidation prices. So you can only go down 99% in the asset, but the asset itself can infinitely go as much high as it wants to. And so if you're not careful shorting, what happens is all of this on the way up represents stop losses, and then it starts getting into liquidations, and these are the entire accounts. So when people are short right here and they don't use a stop loss, or maybe just like everybody the other week there where MEXC went down and the stop losses stopped working and people couldn't get into their accounts to cancel the trades, they're wrecked. So is the price really pushing up because everybody loves Bitcoin, or was the market makers just pushing it up to take out all those accounts and seek all that liquidity? It's just the same thing that happened down here. All the people who thought they knew what time it was just got liquidated, and then the people who chase got stopped out. People who don't know how to buy bottoms got liquidated, and it's just a cycle that rinse and repeats. So what we call the 4-year Bitcoin cycle is just the market maker liquidating everybody, all the hedge funds, because they're not worried about your few $100s. Like, the market's generating patterns to trade back into them for people who are greedy and don't pay themselves. And it does that without knowing that you're in the charts. They don't care about the little money. They want the hedge fund money. And no, hedge funds are not market makers. Wow, tunes. Where's the tunes go? Yep, that's right. We've now cracked the code, man. You want to know what's awesome? Is that just like how you pull fibs and the negatives are the targets? So if we go on a macro scale and we go up here, we can see that our targets are like huge. $119,383.64. Nice. Yeah, so this is where I'm expecting Bitcoin to top out. And if it gets real rowdy, right here, $177,408. This is where I'm expecting Bitcoin to bottom out. Or sorry, to top out this cycle. We'll check this out. The bottom of the bear market, and we go to the top of the bull. Comes down, trades in nicely. Never comes back down here, right? Ever, never comes back down. In any one of these cycles, after price leaves this golden pocket, Bitcoin never sees below the 786 ever again. But look at those targets. Look at that target, bro. This is from the bottom of the last bull run, or the bottom of the last bear market, to the top of the last bull run. Look at that delivery. 4. We're at 4 deviations away from this price range. Look at that delivery, man. It doesn't get better than that. So let's go to 4 just for shits and giggles. Let's go to 4. We got 293,475 as a 4th standard deviation from there. That is gorgeous. I'm not saying that's going to happen, but Bitcoin, it's a possibility. I think Sammy was just saying about institutions, more institutional funds coming into the markets, which is what's going to push these up. And it's completely possible that we see a 200, almost a $300,000 Bitcoin. You know what, man? We should screenshot this and we'll come back to here and we'll see what time it is later in a while. 2028 target. What is it now? That's 5 years from now. So we'll be in another bear market then, I think, because it's a 4-year cycle. I think pump for 3 years and then dump it for a year, I think is what happens. So from this bear low to this bull high was 1,035 days. So 369. So this is 3 years of pumping and then 1 year of dumping. I think this one actually went on a little bit longer. So we'll go to the bottom and 365. 365 days to the day we dumped. So 4 year cycle right there. So you could even project this into the future and you could say that this is going to be our SR flip for the next cycle. So after we come up, let's say we actually get to $300,000, goes, it's going to come down and retrace from this bear market low to this high. And then this is going to be the golden pocket for the next. This is going to be the bottom of the bear market, $75,490-ish, according to these projections, based on the repeating phenomenon that Bitcoin does every 4 years. Yeah, dang. I know, right? Seems so unrealistic. And then when you go in, you're just like, oh, okay, well, that does seem a little bit realistic. That seems a little realistic. Like, look at that. That's a 786 retracement. Bear low, bull high, retracement, gone. Oh, look at this one. The very, very first bull and bear cycle Bitcoin ever had. Oh, look at how cute it was. It was $2.92. Aww. Aww. Look at that, eh? Just dug into buy side. Filled this little inefficiency right here. And then took off. And where did that go? So this one went to 5, 6. Oh my gosh, dude. Look at that, eh? It it just mooned. It's like 5, 6, 7. Like this went up. This went way out of my fib targets. Like blowing. Oh yeah, this is the algorithm. This is Bitcoin market algorithm. This is how price operates. This is how I can go down into the 1 minute time frame. I can go down into the 5 second time frame and do this. Price action is not noise underneath a 5 minute time frame. Don't let anybody tell you that. Look at this 1 minute time frame. There's the bull high. It comes down. It's stopping everyone out here. It hits the 786 retracement. Goes up. Comes back down. Hits the 78. Look at this. Look at this. If I turn my MEXC, yeah, it's on. Look at that delivery. You get that better. Look at that delivery. 786 retracement and gone. This is why I pull fibs, bro. I don't need oscillators, indicators, animals, Elliott wave, order flow, white calf, supply and demand. All I need is fibs. All I need is fibs and where's the liquidity? That's it. And look at that. 5th standard deviation away from this bottom. So I'm taking profits at the 0.5. I'm taking profits at the 1. I'm taking profits at the 2. I'm taking it at the 3, the 4, and the 5. And I mean, if you're catching bottoms with me, bro, you could use a little bit more than you have been because you've been doing $1, right? And if it goes down, you're adding a little bit more. But if you're catching bottoms and Another thing, the reason why we're doing high probability reversals in the class is because eventually you're going to graduate to, or sorry, from laddering in to just finding the high probability reversal and then just getting in on that and riding it up. That's kind of the next level to this system. We're catching bottoms. So like if price goes against you at this point, you don't want to be in the trade. So to you don't need to risk very much to gain a lot buying bottom hunting. So if you got in on this dope ass retracement, your stop loss is right. Nah. This is a 21 risk to reward, 21 to 1. Right there. If you were risking $1,000 in this trade, that's a $21,000 move in the 1 minute time frame. Like, wouldn't you like to make $21,000 just all of a sudden? I do. Look at that, eh? Yeah, look at that. Just a beautiful, beautiful retracement. Look at that. And it's just pumping. It doesn't care. Doesn't care about buyers. Doesn't care about sellers. Give me liquidity. It is so freeing. It really is. Like, you don't have to guess anymore. You just have to keep doing the same thing. Like, everybody in the trading group sees me hitting all these trades, and I lose a couple, but I'm nailing all these trades that I put in the group, and yet everybody's still all hopped up on everything else, and they don't understand that this is repeating. And that they can exploit it. Like, I'm giving you a money printer. I'm giving you cheat codes to this. And I don't understand why people don't gravitate towards it. Yeah, man, not guessing. Holy, it just feels so freeing. And then knowing that this happens every day, all day, you can be comfortable away from the charts, knowing that all you got to do is wait for the blood. You wait for the blood, you buy the 786 retracement, and you're in like Flynn. Like if you were to grab that at 200x leverage, that's 260% right there. No drawdown. Granted, it comes down towards, but it doesn't ever take out that swing low, right? So you move your stop loss up to entry after it trades away, and if you get stopped out, you don't want to be in it, right? It's gonna trade downwards, but no, it retraced deep into a retracement. And yeah, excited for dumps. I'm like tripping over animals to get to my computer. Well, I think I'm going to shut her down. And this was the trade. If anyone in the group got in on it with me. Oh, Robert, gee. Hi, web dev guy. Can't stay on long, but happy you're doing some live stuff. You are the master. You know, if you want to watch this in ×2 speed, um, um, there's some hidden gems in here that you might like. And thank you, man. I appreciate that. Um, you know, I still got a lot to learn, and I don't need to learn anything else really. I got my setup, and it repeats, and I play it. So I mean, yeah, there's lots to learn, but uh, don't really need it. I'm gonna go try and act normal in Starbucks next week. Yeah, so we have taken out this local swing high. We've taken out this local swing high now. So when you see price action moving up like this, don't FOMO in here. If you didn't get the 786 retracement, and if you didn't get this retracement from this, don't FOMO in here because it's likely to come back down. And you can pull your fibs from low to the swing high wherever it lands. And just practice your patience. Just be patient and let price action tell you that it wants to go higher. And there's like a 10-second delay. That's crazy. I wonder if I can switch that somehow. Are you going to stay doing live streams regularly? I think every few days for a little bit, or maybe weekday Asia sessions. Especially days that Sammy's not doing things. So like yesterday he did a screen share, and I wouldn't want to overlap him. Do you have a typical percent target for small time frames or fib targets? So this trade, for example, this was the one I fell asleep to, and my profit target got hit. It might have even been this high, but what I do is the same thing every time. And after price has made a stop hunt, I'm looking for that retracement, and this is the here's the swing high that was violated by price action here. So it looks much like what we're doing right now. So that retracement right there was, I actually entered in this candle here, this retracement right here, because in the smaller time frames, I got a little special sauce where I know that price isn't coming back down in here. So I entered in here and I waited and I waited. And this would have been the prime entry. Now, because we're buying bottoms, and this is what I've been teaching you guys is to buy bottoms, no drawdown. I'm targeting this high after this high. So I'll get rid of this fibs. I'm targeting this high and I'm taking a partial right here. And it doesn't seem like much of movement, but this is 100% at 200x. So what you really want to focus on is paying yourself, because even though price bounces off the 786 retracement, there's no guarantee we're coming up here. But there's a 98% probability that we're getting some kind of bounce. Now, because this double top right here was formed, this would be another target if price is showing weakness. So what I do is I target the highs. and I take partials at every high. Why am I doing this? Is because all the people who were short here and here, if they didn't get stopped out on the way back up here because they left their stop loss right here, if they shorted and price did an SR flip, their stop losses are here, here, and here. So when I long, I'm buying and I'm going to sell them my position. You want to use everybody as exit liquidity, and you can even take this a little step further and you can go, I'm targeting here, I'm targeting here. So you can decide from this bottom pattern right here where you want to take targets. This is an absolute must right here. When you're at 100%, you must take a partial here and move your stop loss to entry. Now, because you're buying bottoms, you can add a little bit more to the trade. You don't need to do $1. You can add, when you get comfortable with this and you get used to it and you trust it, you can add as much as you want because you can trust it. If you get stopped out, let's say you added $100 to this trade, you have $1,000 in your account. That means that you have 10 trades before you blow your account entirely, right? Now, if you're risking the whole $100, but this stop loss right here is only 0.18% times 200x, so 0.36%, right? Excuse me. You're not risking your whole $100. You're only risking, what is that? 0.36% of that $100. So you're in a good position. That's why buying the 786s are so key, is because the price difference between a 618 and this swing low is greater than the 786 and this swing low. So you're using more in the trade and you're risking less. So as soon as this hits, you're taking $60 out of the trade. You're moving your stop loss up to entry, not break even. If you're moving your stop loss to break even, that means that your stop loss is still way down here because you've just taken $60 out of the trade. So if you want to break even, that means that you're willing to lose the $60 you just gained, anticipating that price might want a turtle soup like this right here. Just come down and take it before going up, right? But I don't play that. I don't, if we break the swing low, I don't want to be in it. That was just an example of how to break even. When you are taking your $60 here, you're moving your stop loss to entry. That is called securing the position. So you've taken $60 and now you don't want to risk anymore. If you wanted to use $20 in the trade, what I would do is I would enter in $100 on the retracement, and this is what I do, I just said do, T. You take out $80 right here, you leave $20 in the trade with your stop loss at entry, and now you have $20 in the trade, and you've secured your position. This is the secret to my sauce, guys. The old risk-free re. Yeah. So yeah, just to answer your question, I'm targeting these highs. I'm targeting all swing highs. I'm not really, I use the fibs as a general guide, especially when I'm annotating things for you guys in the group. I'm using them as a guide. So this 0.5 extension was this high, which is where I take profits. This -2 extension is this high, which is where I'd be taking profits, and then so on. The third one is up here, and the fourth and fifth are up here. And sometimes you don't get this, right? Like, this is a beautiful move. This is absolutely beautiful. You know, I personally do not recommend trading more than 2 assets at a time. And the reason for that is just in case I need to mitigate a position, I have the capital to do so. Also, if you're in several positions and Bitcoin decides to take a big giant shit, all of your positions are going down. Now, if you have $5 in 5 trades, that's $25 at 200x leverage. So now your account is over leveraged. This is what over leveraging means. Not over positioning. This is what over leveraging means. Is when you have too many max lev trades open. So $25, and if Bitcoin was to drop to 0, you go $25 times 10,000% equals $2,500. So if you only have $1,000 in your account, you have a liquidation price with all your trades together, with all 5 trades together. But $5 times 10,000% is $500. So if you have $1,000 in your account, you can open up 2 trades at $5, and then you'll have a liquidation price when price starts moving against you in one of the assets. So I do not recommend trading multiple assets, no, especially with the same account. And it's really pointless because all of the coins move together for the most part. It's really absolutely pointless. If you want to trade, an asset that moves with Bitcoin and you see a bullish setup in Bitcoin, then you can drop into a coin that's worth a lot less and get a lot more movement out of it. And percentage wise, you're very welcome. And that way you have all your capital to lean on, and you can use a little bit more in one single trade instead of spreading yourself out. Because I think most people, when they spread themselves out, they think, okay, one of these coins is going to pop, right? Like those guys aren't really playing TA the way it's supposed to be played in any style. They're kind of just hoping one pops off, and that's where people blow their accounts. Yeah. I think we might have one more tune here. Man, I found one tune yesterday. It was so cool, and then it just disappeared. I have no idea. I really, really was digging it. Look at that, eh? It just keeps moving. If you missed that entry on the 786, you're just like, why? Why? Oh yeah, so this pattern right here. This pattern right here. It's the exact same thing. Drops, rises for a bit, retraces, and then rips. Drops, rises for a bit, takes out swing high, most likely retrace, and then got it. Interesting, I don't see MACD, SRSI, RSI, etc. Those, I don't really want to be too controversial, but nobody needs any of that stuff, ever. Those are all delayed, and they all read price action. If you get intimate with price action, you can just read it yourself. And the market maker can't hide in level 2 data and order book flow and all that other jazz. The market maker likes to trade into that stuff. And so by just pure naked price action, you can see exactly what's going on. You can see that this double bottom played out only to get traded into right here. This double top played out only for it to get traded to right here. And then everybody playing this bigger double bottom got traded into right there. And then everybody that went short here got traded into right here. Then it traded away, made a double bottom, took out this top here, this double top here from the shorts, and then traded into this double bottom. Then came down and made the little cup and handle that we were playing the other day, and that went up. It's just like, oh yeah, the light is for real. You just want to be in with the liquidity. You want to be able to spot liquidity. Yeah, everybody calls this noise and random buying and selling pressure. Like, I don't see that. I don't see any randomness in this at all. I see very, very meticulous price action that is serving a purpose. I don't understand how people can call that buying and selling pressure. That dropped to my 786 retracement to the tick. Like, there it is, right there. How is that random? Somebody tell me, please. Rec City. Yeah, and that's what happens. That's what happens. Price action, made a double bottom, traded into it, made a double bottom, traded into it, made a double bottom, traded into it, and then went and traded into all these stop losses right here from all these guys shorting. They moved their stops here, then they moved their stops here, then they moved their stops here, and then they moved it down here, all the bears, and then they got burnt. Yeah, absolutely. Liquidity is liquidations. And Bookmap and the liquidation indicators, they're all spoofed. They're all spoofed. That's how the market maker hides. Well, I'm going to shut it down for now, you guys. TGIF, I love you guys, and we'll see you in the trading group. Thanks for joining me and hitting the like button. I appreciate it. Brrr, money printer go brrr. Wish I could watch this video more than once. Oh, absolutely. You can. It's going to be on my YouTube, and you can actually go to the speed in the settings and double it, so you can watch it twice in the same amount of time. You're very welcome. Thank you very much. I appreciate it, guys. God bless you, and we'll see you in the group.